All right, let's talk about NVIDIA. They just dropped another one of those monster earnings reports. And I mean, on the surface, it looked like an absolute home run. But if you're an investor, you definitely noticed something weird. The stock actually went down. So, what's going on here? Let's dive into this little paradox and figure out what Wall Street is seeing that maybe the big headlines missed.
And yeah, this is really the mystery we've got to unpack today. I mean, on one side, you've got all the triumphant headlines, right? Record-breaking quarter. NVIDIA does it again. And then, on the other side, you have what actually happened to the stock. A 2 to 3% drop in after-hours trading. It's just a classic case of the numbers telling you one thing and the stock price telling you a completely different story.
So, yeah, this is the big question. It's what every single NVIDIA shareholder is asking right now. Did the market just totally overreact? Or are there some real, genuine concerns hiding just under the surface of those amazing numbers? All right, let's break it all down.
Okay, first up, let's look at the bull case. And honestly, it's incredibly strong. We're talking about numbers that prove this AI boom isn't just real, it's actually accelerating.
Okay, first, just look at this headline number. Quarterly revenue hit a staggering $46.7 billion. Now, to put that into perspective for you, this didn't just squeak by Wall Street's already crazy high expectations. No, this is a massive 56% surge from the same quarter last year. I mean, that is the kind of explosive growth that just proves the AI boom isn't hype. It is a tidal wave of demand.
And that strength, it carried right on down to the bottom line. The company's adjusted earnings per share, $1.05. Again, beating the consensus estimate. And this is so crucial for investors, right? Because it shows NVIDIA isn't just selling a ton of chips. They're doing it with incredible profitability. They're actually turning all that revenue into real hard cash. But hey, as any investor knows, the market doesn't really care about last quarter. It cares about next quarter. And this is where NVIDIA came out swinging. They're forecasting $54 billion in revenue for the next quarter, just for the next quarter alone. This is way more than just an optimistic guess. It's a powerful statement from the top brass saying, yeah, we see this incredible momentum and it's not stopping. In fact, it might even be speeding up.
And look at how that forecast stacks up. I mean, the market was already expecting a huge number, right? Almost $53.5 billion. But NVIDIA just walks in and confidently raises the bar even higher. This is what we call a classic beat and raise on Wall Street. You beat what everyone thought you'd do this quarter and you raise your guidance for the next one. It is the absolute gold standard for an earnings report. And usually, a move like this sends a stock to the moon.
Okay, so if everything was so great, why did the stock drop? This is where we gotta flip the coin and look at the other side of the story. Let's look at the cracks in the armor that clearly made the market a little nervous. This chart right here, well, it tells you pretty much everything you need to know about what NVIDIA is today. A whopping 88% of its revenue, it comes from just one place, the data center segment. This is the absolute engine room of the company, driven by those AI chip sales to cloud companies and big enterprises. So how this one segment performs? Well, it's everything. And here's problem number one. While the data center division grew an unbelievable 56% year over year, its revenue came in at $41.1 billion. That's just a hair shy of the $41.3 billion analysts were looking for. Now, I know that sounds tiny, but you have to remember, for a stock that's priced for absolute perfection, even the smallest miss in your most important segment, that's enough to spook people. The second issue, and you could argue it's even bigger, is all about geopolitics. So the US has banned exports of advanced AI chips to China. And because of this, NVIDIA had to come out and confirm that its blockbuster Q3 guidance, that huge $54 billion forecast, it assumes they're going to make $0 from China, a market that used to be a really big deal for them. And if you want to put a dollar figure on that, well, this policy effectively just wipes out a potential $8 billion in annual revenue. Poof, gone. That is a massive headwind to have to fly into. It forces the company to find even more growth somewhere else just to make up for what they lost. And that kind of geopolitical risk just makes investors really, really nervous.
And it doesn't stop there either. You've also got investors looking at rising operating costs. They're up almost 38% from last year. On top of that, there's an ongoing antitrust investigation from the Department of Justice. And then there's just that kind of constant background noise, that fear that maybe, just maybe, we're in some kind of AI bubble. It's a whole cocktail of real-world risks piling up. But look, NVIDIA's management has a powerful answer to all these short-term fears. And that answer is a very clear, very compelling long-term vision. So let's see how they're making their case for future growth. And it all starts with their next-gen tech.
The message from CEO Jensen Huang on the earnings call, it was totally clear and confident. He said demand for their next-generation chip platform, which is called Blackwell, is going full throttle. This is basically the company's way of saying, yeah, we know there are headwinds, but guess what? The next massive wave of growth is already here, and it is a monster.
And look, this isn't just talk for some distant future. The Blackwell platform is ramping up into production right now. The even more powerful Blackwell Ultra chip is set for release in October. The company's whole vision here is to power this global build-out of what they're calling AI factories, and Blackwell is going to be the engine that makes it all happen. And hey, if the long-term vision wasn't enough to convince you, the company also decided to flex its financial muscle. They sent a very clear message to Wall Street by authorizing a massive $60 billion share buyback program. So what does that mean? It's a direct way to give cash back to shareholders. And more importantly, it signals that management thinks their own stock is a fantastic investment. It basically creates a strong floor of support for the stock price. Okay, so we've got a super powerful bull case, and we've got some very real reasons to be cautious. So how in the world does an investor make sense of all these conflicting signals? Let's get right to the bottom line. This table right here is the perfect picture of the tug of war that's playing out in the stock. On one side, you have the bull case, the reasons for optimism. You've got that strong Q3 guidance, the massive $60 billion buyback, and the fact that Blackwell demand is accelerating. But on the other side, the bear case is just as compelling. That critical data center segment missed its target, you've got zero revenue from China, costs are rising, and there's regulatory pressure. It's a real battle.
So what's the key takeaway for your portfolio? Well, first, that beat and raise story is absolutely real, but so are the risks. Second, the market's focus is clearly shifting. It's not just about pure growth anymore. Now it's about the impact of geopolitics, like China, and rising costs. And this is the big one. The performance of the new Blackwell platform is the single most important thing to watch. That's the real catalyst. And finally, you should definitely expect some near-term volatility as all these forces battle it out.
So really, the NVIDIA paradox leaves us investors with one critical question. Is the revolutionary power of Blackwell gonna be enough to overcome these very real-world headwinds, like the China situation and rising costs? The answer to that question is probably gonna define the next chapter for the entire AI industry. If you found this helpful, please subscribe.